Hey everybody, this is John. Welcome to the free video, and let's just kind of dive in here and take a look. So we're going to take a look at the Qs, spiders, and the Russell here real quick. And then also a trick I've found to kind of choose which options to trade on a particular stock and what strategy, which is kind of fun. On the Qs, we're obviously have got a lot of resistance here. This is the fire line. It's formidable resistance. What's intriguing here is that if with the squeeze essentially has the power to push it up through there. Okay, and I was particularly intrigued by the market action today because we woke up with, there's a lot of bad news. You had Syria bombings, and then the employment numbers were a lot worse than expected. Yet at the end of the day, the NASDAQ was pretty much unchanged. Okay, so that's, it just gets me very wary of the bearish side, even though the bearish side would seem to make the most sense. If we look at IWM, we can see here it's a little more negative, a little more toppy looking, below its 21, etc., etc. However, we do have a squeeze here, and the idea, and this one is, I would call it more neutral. We're not really clear which way that's going to go. All right, so we got Qs a little bit more on the bullish side, IWM, I'd call it more on the neutral side, and then you've got the the spiders, which are also a little more on the neutral side. It's it's still in this kind of a downward channel, but of course when you look at a weekly chart here, it's still strong. And if you look at the monthly chart, of course, you've got a squeeze and all that good stuff. So I'm just looking here at the prospects of a choppy market. Okay, I'm not looking for it to roll over and die. It doesn't mean that it won't, but I'm just not looking for that to happen at this point. So that just begs the question, what are the best strategies in an environment like this? And what I found is in situations like this, if you're looking at kind of choppy to upside, then a good focus is going to be on strategies that are more about like selling put credit spreads and stuff like that. And so if we look at, I'll show you two examples here. Okay, so one, we'll look at Alta here actually in a second. Alta is pretty interesting. But first let's look at Microsoft. Okay, so Microsoft has a squeeze. It's slightly bullish. But we've also seen that it squeezes. They're not huge moves. Okay, if we come over here and we look at Amazon, and you get a squeeze on Amazon, you can see that's a huge move. I mean, the stock has gone from 850 to 920. That's a huge move. Whereas if we go back here and we look at Microsoft, okay, it's kind of a quiet move, right? So we just want to take that into account as we're setting these up. So let's go back to Alta first. So on Alta, we do have a squeeze setting up, and we did set up a put credit spread on this, okay? And I'll grab that real quick so you can see it. So a couple of things to notice here is that, of course, one, it's an at-the-money put credit spread. So we're trading, right around 285, give or take. So did the at-the-money spread. That way we get a high credit. We're not risking 20 to make one kind of a thing. And from there, obviously, we have positive theta, and we have 14 days. So the goal with this is that, hey, it would be great if Alta rallies. It just makes the trade easier. But essentially, if it trades sideways, okay, that's fine too, as we would make some money in premium decay. And then the bonus here is that if the squeeze does fire long, that we clear up through this, and then we have a little less pressure on the spread. Because if it's trading sideways, it could roll over fairly quickly. But if at least it starts this new uptrend, then our put credit spread not only earns a lot of money fairly quickly, but is out of danger of it kind of rolling back down to its sold strike. So how do we determine? So then the question that comes up, well, why not also maybe sell an iron condor on this, because Alta is in a consolidated kind of a choppy market here. So that's a good question. So I'll show you this. What's interesting is you can go in on a particular stock and just say, all right, on Alta, how does it work to sell iron condors on Alta in general? Okay, and if you look at this strategy over the course of 1 year, okay, if you sold an iron condor every 2 weeks, you'll see here, and this is, you can see here, if you sold the, 60-30s or the 50-20s, whatever. You could just, you can plug that in however you want, and you can see essentially that you lost money with every iron condor strategy. Okay, and what's fascinating about this is because that you always hear that, oh, iron condors, that's the easy way to collect income. Yet if you did that on Alta, okay, you would have gotten killed. Now compare just that same blanket strategy. Okay, well, what if we sold, instead of selling iron condors on Microsoft, right? On Alta, say we sold iron condors on Microsoft every 2 weeks and just using the same thing, 60-30s, 50-20s, etc., etc. And you can see the results are dramatically different. And what this helps understand is the natural behavior of the stock. Okay, the natural behavior of the stock. I've just found that this is a very good way to test that. So you can see here, like, wow, if I would just say, okay, I'm just going to sell delta 30 calls and puts on Microsoft, every 2 weeks and buy the 10s as protection, you can see over the course of the last year, that's a 29% return. Okay, so I thought that was fairly fascinating. So along these same lines, instead of doing iron condor, I can go back into Alta and say, okay, well, what happens if I just sell, put credit spreads on the stock? Well, you can see generally, if you're selling the 80 delta, okay, which is pretty high in the money, and buying the delta 40 as protection, you get a decent return. But your biggest bang for the buck is going slightly in the money, okay, and then buying the 30 for protection. All right. And so what's fascinating about this is, again, it just goes back on that particular stock and shows you what general strategy, regardless of setup, works consistently over time with that symbol. So here's another fascinating one, is say Priceline, which is a stock I like to trade. It says, okay, if in general you would just buy calls on Priceline, if you got the really deep in the money calls, which those Delta 90s are super expensive, those calls are like $80, then you did get a decent return. But if you got the 60 Delta calls, you lost 58%. Okay, the at the money calls, you lost 81%. The 40 Delta calls, 83%, and the 25 Delta calls, you lost 97%. So there's a couple of interesting things to glean from this. One is that being long calls on Priceline, even though it's been trending higher, is essentially a disaster simply because the market makers are very, very effective at pricing in this stock. Okay, so that brings us to another point on this. So on Priceline, it's just saying, like, look, if instead of buying calls, you in general default to just selling a put spread, even deep in the money, okay, you can see that it actually works pretty good. And what I found with this is that I can sit there and say, all right, great, I can sell not necessarily deep in the money put credit spread on Priceline, but instead of buying like an at the money call, selling a slightly in the money put credit spread yields a much more effective return. And again, we're talking over the same time frame, and we're talking another bullish trade. Okay, so again, what's nice about it, it tells you the personality of that particular stock. Yet on Alta, if we were to just buy calls, you can see that it actually is effective. Okay, not surprisingly, the deep in the money 90 delta is working the best, but the 60 delta is not too shabby either. So you can see on Alta, we're actually doing a combination of, say, buying a call and selling a put credit spread is a home run, but selling iron condors on Alta is, insane. So anyway, it's just a really cool tool. So what is this cool machine? It's a cool backtester. I've actually never seen anything like this. I love this. If you go to simplertrading.com/CML, okay, CML is Capital Market Laboratories, and with this link, you actually are set up to get a lifetime discounted subscription to this, and it's paid for itself 20 times over just in the ability to match a particular stock strategy to a stock's personality. Okay, just in general, if you're like, okay, every 2 weeks I'm going to do this, or every month I'm going to do this, or every week I'm going to do this, just in general, regardless of the setups, you can see and understand the personality, okay, of that stock. If there's like Alta, if you're selling iron condors on it and getting your butt kicked all the time, guess what? There's a stock that tends to make a greater than expected move. That's huge information. Whereas in Microsoft, if you do the exact same strategy, you would make money. It's like, okay, here's a stock that actually tends to stay within its expected move. That's guess what? I'm going to go sell an iron condor on that. I'm going to go sell a straddle on that, but I'm sure not going to do that on Alta. All right. So I've just found this to be very powerful. That information on Priceline alone has made me more money on Priceline this year than any other thing. Instead of like, you know, I'm like, okay, gosh, I'm certainly not going to, I like Priceline here. Instead of buying 10 calls, I could sell 30 put spreads, make the same amount of potential profit from the call based on the move I was looking at, yet with a lot higher probability of success. All right, so anyway, great stuff. So anyway, I hope you like it. I'll show you guys kind of more how to use it and stuff like that too. I've just found it to be awesome. All right, have a good weekend, and we'll see you at the next update.